Hey, welcome to the 40 Finance channel, everybody. My name's Jeff Beers. Today I've got several stocks that are actually down year to date from when they entered the year. So we're going to look through these stocks that have year to date negative returns, and we're going to try to see, is there some value there, particularly now that we're seeing the market and some of these growth stocks run to new all-time highs or kind of get back to where they were when this year started. So with this batch, we actually have some underperformers. I think the S&P 500 is around plus 15% for the year. The QQQ is up over 5% for the year. So with that in mind, you could consider these stocks laggards. So let's jump into them and see if there's any value to be had. Reminder as always that my stock picks and projections are just my opinion for your entertainment. Please make sure you do your own research before investing. However, if you enjoy stock market analysis like this, going deep on stocks, combing through lists, please subscribe to the 40 Finance channel. Give this video a like. Thank you very much for your support. All right, first stock on the board today is Vertex Pharmaceuticals. This is a company that is fairly focused on treatments for cystic fibrosis, and they've had a lot of success in that field. However, year to date, you can see they started the year, looks like around $229. You are now under $200, and it looks like you had a low in the 180s. Current PE ratio of 1887. And let's take a look at the valuation trend and the projections for this one. We'll sort by an annual basis here. That's what we'll do for all stocks. From a forward PE perspective, you're at a 1712 here right now. And it doesn't take long to go back a few years and see that that is definitely a sort of historic low, if you will, from a forward PE perspective. You also have a PEG ratio under 1, which is very attractive. From a projection standpoint, this is for EPS. We've got 1032 last year, looking at about 1102 this year, 1244 for next year. And then from a sales standpoint, plus double-digit revenue, each of the next 2 years is definitely healthy. All right, taking a look at TipRanks to see what the best performing analysts think about Vertex Pharmaceuticals. My affiliate link for TipRanks is in the description. They are having a 4-day sale right now, so click on that link if you want to find out more. And here we have a few fresh updates on Vertex, most coming less than 20 days ago. Mostly buys. There are a couple holds in here, but if we took the freshest, I would say looks between about $250 to $331 is the target over the next 12 months. So Vertex Pharmaceuticals could be one to research more. All right, next stock on the board here is Qualcomm, the maker of audio technology for mobile phones and other wireless devices. Year-to-date chart looks like you peaked out at about 164 in January, and you've had some ups and downs, and today you're sitting at 140.67. Current trailing PE ratio of 2015. EPS of $7. On the historical side, we have a forward PE currently of 1608, and just eyeballing the last few years, this does appear to be in line with some of the things that we've seen from Qualcomm in the past. In fact, you could argue that back in 2018, you're about flat on the forward PE valuation, but on the PEG ratio, again, well under 1. That's similar to 2020, but it is actually lower, which is better than we've seen in many of the other previous years. And anytime you have a low PEG ratio, it usually means earnings are going up, and that's what we see here. Last year at 419, projected this year at 776, and next year at $8.60. From a revenue perspective, 48% growth this year. That's probably already built into the price. But even looking ahead to next year, you're just under double digits. And I'll add here that some of that trend appears to be going up. All right, on the TipRanks side, we have a handful of updates in the last month. All buys. I will call out that it looks like 2 months ago, you did have 3 or 4 holds back then. but the latest ratings are all buys, 175 to 200. That could be as much as a 42% upside if it were to hit the 200 number over the next year. All right, next up is a software, Autodesk, ADSK. This is a 3D design type software used by engineers and many other industries. Their high in January came in, it looks like around 320. Today you're at 294, which is off of a bounce from 273. So this one might be headed back up here soon. P ratio of 50, EPS of 584. Looking at historical valuations, forward PE of 58. Kind of a mixed bag historically. That's a little bit higher than January and 2020. However, if you go back to 17 and 18, it does look like it's substantially lower. PEG ratio on this one of 2.16, maybe not as attractive as some of the other stocks that we've seen, but let's take a look at the growth numbers. All right, on the earnings side, 405 last year, projected close to $5 this year, and a big jump next year up to 687. Looking at the revenue estimates, 15% this year, almost plus 20% next year. So maybe this is one, perhaps not at 293. It might not be the best value on the board, but maybe you catch it in a dip. And I would say, if anything else, the future and the earnings and revenue look pretty strong for Autodesk. All right, on the TipRanks side, we have several updates over the past 21 days, including one hold, 3 buys. The most recent price targets provided range from 335 to 370 over the next 12 months. If you were to hit 370, that would be about 25% over today's price. All right, next one on the board. I've talked about this several times, but AMD is actually down year to date, which is kind of crazy to believe when you think about what they did through the pandemic. But $97 here on January 11th. It did reach a low of 73. You're on an upward cycle to 89 right now. P ratio of 37, EPS of 238. Taking a look at the historicals here, forward PE of 39. That is lower than the past 12 to 15 months. However, fairly in line with 2017. Let's take a look at the growth estimates. So they had $1.29 last year, approximately $2.17 this year, inching up to the 270s next year. And here's really where you saw AMD hit a rut. Plus 50% in revenue this year is the current projection, which I'd say they're on pace to hit. And then only 15% next year, and I say only because 2020 and 2021 were very big years. So I guess my 2 cents is to look for dips if you're interested in AMD. Nothing wrong with the 89 price for the long term, but you might get lucky and see some market weakness with the recent run-ups we've had and pick it off even less than this. All right, on the TipRanks side, we've got a couple in here over the last month, including one hold. Then you have buy, sell, of all things. There's a sell in there. But the 3 buys are in the triple digits, 100 to 110. The sell did not institute a price target, so it's hard to really say what the philosophy is there. But overall, I would say analysts are projecting upside for AMD. Again, maybe you get a little picky with your entry price. All right, next on the board is SelectQuote. This is one of the smaller cap stocks, I guess you would say, at $3.26 billion. And SelectQuote has had some good peaks this year. $32 here, $32 again in April. Then it fell off a cliff and landed around 20 where it is today. No P ratio and EPS on this screen. However, you can see on the statistics page, we do have a forward PE of 15. That's considerably lower than what we saw last year. Not enough information for the PEG ratio because this is, I believe it's an IPO. It's an old company with an IPO that came out last year. Now, as far as earnings growth, 83 cents last year. Projection is about flat for this year, but then next year they're projected to land around $1.25. And look at these revenue numbers. This is really why SelectQuote is in here, is because they're, borderline profitable, and they have a plus 76% revenue target for this year by most analysts and another plus 40% next year. On the TipRanks side, not a ton of coverage, honestly, and that's probably because of the IPO. The best we got is 2 months ago. You had 2 buys between 33 and 40. I'll say that I'm sort of attracted to SelectQuote from a valuation standpoint, but I will say that you'll have to read their earnings reports and go through the details. I think it's just interesting that SelectQuote's valuation is where it is when you have all this hustle bustle about Lemonade and some of the other online insurance options that are out there, that people are buying those stocks. And SelectQuote, quite frankly, has been in the business much longer. And if you read about the company, they have plenty of online exposure. It's not a dinosaur company by any stretch of the imagination. All right, next on the board is LCI Industries. This company supplies all the key components and OEM parts for most of the RVs that are out on the road. This was definitely a pandemic winner. However, year to date, it looks like your high was in the neighborhood of 151, and it's since taken a tumble, now lands at 131. P ratio of 16.21 in the trailing 12 months. You got $8 worth of EPS. As far as recent history, forward PE of 15. That's slightly lower than what we've seen over the past several years. Certainly when it was on its dip below 130, you were definitely doing better. No PEG ratio on this one, but a fairly attractive price to sales at only 1x, and that's probably because it's more of a manufacturer than a retail play. All right, on the analysis side, strong EPS growth, 649 last year, 1028 this year, 1105 next year. And I think this is where you're seeing the struggle for the stock right now. Plus 36% sales growth this year as America, invests in RVs to kind of take control of the pandemic situation and where they can go on vacation, right? And then next year, there's a slowing or a projected slowing of sales growth. So you really have to study the RV industry with this one if you're going to start a new position. And maybe if you come to a different conclusion than single-digit sales growth next year, this could be a good one to get into. All right, last on the board is Netflix, and this one peaked at about 586 in January. It slid down to 487. Now you're at 530. I really like Netflix as the beaten down underdog, it seems, at this point. It seems like a lot of investors have left them, for the Disney Pluses and the Rokus and the things like that. And I think that Netflix is getting ready to have some of its best years. Certainly, if you're a subscriber, you've seen the uptick in quality content. But for purposes of this video, we got a P ratio of 64, EPS of 826. When we look at historical valuations, forward PE of 51, that is a nice all-time low for Netflix since, we're on quarterly. Let's switch that over. The forward PE of 51 is a historical low for Netflix right now. You got a PEG ratio under 2, and maybe 530 doesn't stick for very long with Netflix. We are in an upward market right now. I would say anytime you see the stock under 500, you'd have to think about it. And here's why I say think about it. You got EPS going from $6 to $10.50 to $13 in 2022. You have double-digit sales growth over the next 2 years. And I think what you're going to see with Netflix, along with some other streaming providers, is just that constant generation of profits, similar to the cable companies of the 80s. All right, on the TipRanks side, we've got a few updates. Looks like over the past 21 days or so, you have holds, 1, 2, 3 holds, 2 sells, and 5 buys. So it's definitely split down the middle here. You got price targets between 448. The high was 650 12 days ago. So there's definitely sort of a coin flip going on Wall Street analysts. For me anyway, if you're going to hold this stock for 5 years, I think that there's plenty of great years left in Netflix. All right, investors, so those are stocks that, believe it or not, in this upward market, they're actually down year to date. So I went through quite a few names there, and the concept was like, hey, these are just going through stock screeners. These are stocks that I noticed may have some free upside left in them over the next year, certainly compared to some of the growth names that have recently just taken off over the past 10 to 14 days. If you're looking for a new position, this might be a place that you can still find value. All right, guys, hope you enjoyed this video. Please give me a like and subscribe if you did. We'll see you on the next one.